Hello, 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 everyone. Good morning, good afternoon, good evening, wherever you are, or whenever you're watching this live. Today is the first episode of my season 6 of Expert Interview Series. Are you excited? I am so excited after a long break. I am restarting this or relaunching this Expert Interview Series again with lot more of experts. You all know that episodes are not, or at least the subject matter is not repeated in a season. So today I've got a very good friend, my soul sister, I would call her, because she is, I came to, we've known her, each other just few, maybe 8 months, 6, 8 months. Is that right, Nook?
That's right. That's right.
So Ngoc is one of the financial whiz, as far as, and she's also a business owner. You know, sometimes you have experts. They are experts, but they have not owned business, but they would advise. Whereas this woman, she has got multiple businesses. That's for another day. She's got multiple businesses. She is an accountant, certified public accountant. She helps nonprofits in England or in UK and Scotland. We call charities. And she's got other businesses as well. And she's a mom. She's wife. I don't know how this woman manages. I am really flabbergasted by the energy she has got. It's 7 o'clock in the morning, and look at her. I would be like, when I am at 7 o'clock, you are a great Knock. Let me read out her bio. So my eye contact is going to be reading out. So Knock Tran is a certified public accountant, debt and wealth coach, global business connector. We've got that in common. Impact speaker, international best-selling author. Oh, we've got to ask about that book. It is wonderful, her story is. And host of the Paradigm Shifters show on Boss Ladies Network TV. She's a CEO and founder of JJ Capital Partners. She believes in financial literacy. Yes, after COVID, many would have, even before that, many understood, but COVID has put that up a notch. Literacy is the key to time and financial freedom. I talk about time and financial, we've got to get that one right. And she is on a mission to empower people to understand their financial health and help them make money, save money, protect their money, and eliminate debt. Today, she's going to talk about importance of financial health. I gave a introduction, also like she's multiple business owner. That is for another day. Did I tell you that? No. Yeah, that's for another day. I've already booked her for another day that she is going to come and talk to us about that. So Ngoc, take it away. Tell us a little bit about yourself, girl.
Awesome. Well, thank you so much, Sudha. It's a pleasure knowing you and being global business sisters. But my background is I came to the U.S. as a refugee from Vietnam, and growing up poor, I really understood the value of money and how important it is to manage our money properly. So I put myself through college, working full-time and going to school full-time. And really the wake-up call for me was a divorce. And the divorce, as being a single mom, really made me realize there was a financial gap in how I was seeing my money. When you have two streams of income, you don't worry as much. But when you have one stream of income as a single mom, you got to worry. And that was my journey of figuring out, where is the gap? And today I am a proud owner of JJ Capital Partners, and I teach financial literacy to everyone, to families, to business owners, anyone who want to understand how important it is and how to understand the 6 pillars of your financial security. What do I mean by the 6 pillars?
Let me come to that one bit in a bit. But financial, most of my audience are all over the world. I would like to clarify this from you because you're the expert. This financial pillars or 6 pillars you're going to talk about is common. It's country agnostic, isn't it? It's everyone
Yes,
has to have these pillars in place
correct.
so that it doesn't matter what accounting regulations you've got within your country, but this is general. We need to know for the
Correct.
health, isn't it?
That's correct. It's not specifically a tax or anything. It's just in general. These are things you got to be aware of how your financial is impacted, right?
Yeah. Yeah, that's good. So, what do you think people are doing wrong right now? What is that which really is a peeve for you? That how people, if only they know, and you feel like you've got to shake them up and tell them this is how you do it. So, what is that thing which they are doing which they should stop doing?
Well, it's the number one thing that we're all doing wrong is how do we manage our debt? It's huge. If we really understand debt and how the inflows and the outflows, if we're making money, right, and we're making money and we're not making enough and we're spending out more, which is the outflow, it's a huge problem. And then you acquire more debt and the debt keeps accumulating. And we're not understanding the relationship between interest rate and how it impacts our money, right? So it's huge. If you just understand some basic rules of debt management, you'll spend money differently.
Yeah, actually, this happens, isn't it? Government wants you to spend, and that's how economy goes around. There is nothing wrong in spending and keeping the economy alive. There is also another strand of it that where we all have to look after our own financial strength. Where we are, if we need to retire in 10 years time, how do we plan, how do we get things, go and get consultation with experts like you to find out what is, or even if the goal is to clear off the debt, that would be another plan which we have to budget, how we budget and all of that. And there is also another element of residual income, or the income which I mean, to be frank with, in last 6-8 months, my mortgage has doubled. My outgoing has increased almost. The residual income it was like that, and it's just not even scraping it. Like, when is my next check going to come from? Where is the money going to come from? Where am I going to get the client from? All of that makes people worry a lot, and that affects your mental health, physical health, and other things as well, isn't it? It's I think you're the expert. You see many people. In my opinion, at least, clarify this for me. In my opinion, at least, that mental health and physical, apart from other things, I'm not saying financial is the problem, but financial is the root cause of many mental health challenges like depression, stress. How am I going to put food on the table? How am I going to keep the roof over my head? All of this comes and is the basics of financial health, or
they're all related.
Absence of financial health, I think.
Exactly. They're all related, because if you don't have financial health, you're worried, and then it leads to stress and all the things that you talk about: mental, spiritual, emotional stress.
Yes.
And then it leads to health issues, right? So if we are able to, a lot of us, what we don't understand is what we have a roadmap when we don't know where we're going. We have a GPS, but how many people have a GPS to their financial future, where they're planning out their distribution when they retire, how much money they're going to come in when they retire, is it a residual income or is it active income? Residual income means, is your money working while you're not working, while you're not trading your time for money, right? And a lot of us aren't taught that way. We're taught the W-2 way, going to work, working for corporate, trading our time for money. And then when we retire, there is no more streams of income coming in because we retire except for our retirement income. And then are we saving enough for the retirement income so that we don't run out of money?
That's a challenge. So how do you, when someone comes to you, how do you go and give talks on financial literacy for, especially for business owners, women entrepreneurs, and charities and or nonprofits in your case? So how do you, what should we be doing? What are those 6 pillars?
So the 6 pillars, the first one is cash flow. Right? Do you really understand, like I touch base on, do you understand every dollar that comes in and every dollar that goes out? Where are the savings that you have for every dollar that goes out? Where are the needs versus the want? If you're spending based on want, right? And that's where you're going to get in trouble because you're not making enough.
That's me. That's me.
Exactly. And so that's where we got to understand inflows, outflows, right? The second pillar is understanding debt and how do we manage debt? Are we using good debt to build wealth? Or are we incurring bad debt for our living expenses? What's good debt? Let's say you have a debt where you can use some sort of product that you're paying off your debt, but building wealth at the same time. These are strategies that the affluent use, right? The bad debt is the car. It doesn't do anything. Yes, you have a car, but you have debt that you incur on your credit card that's way over your head. So I'm going to share a simple rule. It's called Rule 72, and it applies to every country. It doesn't matter what country you are. Take the number 72, divide it by the interest rate or the inflation rate, and the result is the number of years your money will double. So if you're putting money into a savings account at 1% that the bank gives you, it takes 72 years for your money to double in growing wealth. If you're spending money on credit card at 18%, it takes 4 years for the bank to grow their wealth. If inflation is at 9%, every 8 years, the cost of food is going to double. Basic rule, just apply that rule in understanding money.
You've got to give me the rule again. 72 divided by inflation rate or
interest rate.
Interest rate, okay.
Result is the number of years the money will double or the cost of food will double. Right? 72 divided 1% in the savings account is 72 years your money double if you put your money in a savings account.
Okay.
Right? So
1% interest rate. If
correct.
It's home, it would be a little bit lesser. Okay.
Correct. So imagine putting your money in the bank and the bank is using your money and lending out money through credit cards or loans and stuff. They're charging a higher interest rate than what you are receiving as the customer when your money is sitting, when you're putting $100,000 sitting in the bank at 1%. You're barely making any money, but the bank is using your money and lending it out to people at a higher interest rate.
Oh,
who's smart? You are. The bank is smart.
Okay. That really, banks always make money. They don't have money. They make money from us.
That's right. That's
and
right.
They want us poor as well. That's another thing which we all have to think. Bank wants you poor, so that they can lend you the money.
Exactly.
And another thing which I wanted to touch upon in this pillar before you go to next one is what is the good debt and what is the bad debt? Could you explain it? I know you touched it, say car loan.
So good example of good debt is debt that will help make you money.
Okay.
So an example as a business owner, right? So let's say you borrow money to build your business. The return on the business will be much more than the return that you have to pay the borrowing the money. That's good debt.
Okay.
Or strategies on your home. So if you have a home and you incur debt, right? There's strategies that you can put money into certain products that you're paying off your debt, but building wealth at the same time, right?
Okay.
So for us, there's different strategies that we apply to build wealth and understanding debt.
Oh, okay. So that's what you help your clients with, right? Yeah.
Correct.
Yeah.
Correct.
So what is now, first one is cash flow and second one is understanding your debt, whether it's a good debt or bad debt. Is it going to make money or take money away from? So what are the other pillars?
The third pillar is the emergency fund. How much do you have in emergency fund in case you lose your job? Are you having 5 months worth emergency fund, 7.5 months worth, 10 months worth, 12 months worth? What is it that you have? Because it's just an example. When COVID happened, we were all shut down, right? What happens if you didn't have an emergency fund? How would you live off of that? Right? You would live off of credit card and incurring more debt. So if you had an emergency fund and know how to manage it, that's your backup plan, just in case, or you become sick. What are the 3 risks? You become sick, right? Or you lose your job, you run out of money, right? Or you have health issues. If you have health issues, what's the emergency fund you have? Are you going to drain all of your retirement account, or is there another way that you have something that will help pay for your illnesses or your cancer or whatever happens to you?
Yeah, that's the thing. So cash flows, understanding your debt, and emergency fund. What else?
Proper protection.
Proper
What does it mean to protect your money? Right? Are there ways and strategies, because we work so hard to earn our money, but do we understand how to protect that money? Are there ways that we can make money in the stock market without losing money?
Yeah.
That's huge.
Yes.
Right? It's like a lot of us are not understanding that, when we invest in the stock market, we're investing in a strategy called variable strategy, that you have the ups and downs of the market.
Yes.
So let's just take the ups and downs of the market, right? If you have $1,000 and you lost 30%,
yeah,
30%, you lost $300, you're down to $700.
Yes.
In order for you to gain back to be neutral at $1,000, you have to gain back 43%, right?
Yeah.
And not have to gain 43%, because you started at 7, because you have lost $300. What if there are strategies that you don't lose your money, that you have an indexing strategy that if, let's say, the market goes negative, you lose nothing. So you lose 0, you're still at $1,000. And when the market goes up again, you start at $1,000. So you don't lose the opportunity cost for your money that you lost in $300. Huge difference if you understand these strategies where you can start building wealth, not losing money in the stock market.
Okay, that's interesting. Those 4 are like gems. So what else?
So also inflation, right? So let's say inflation. Let's say if you have a strategy like precious metal, is very important. Precious metal, real estate, right? Inflation, it's keeping up with inflation. The reason why is that inflation is what is inflation? If we really understand inflation, inflation is that if our government is printing too much money, and a lot of countries are doing that, they're printing too much money, but it's not backed by precious metal like it used to be. Not before 1971, where every country, when you're printing money, you have to back it up by precious metal. Now, let's say that you keep printing and printing and printing money. What happens to your valuation of your money? You're losing the value. You're losing the purchasing power of your money, right? And so precious metal is a hedging strategy against inflation, because it's been keeping up with inflation. Real estate has been keeping up with inflation.
Yeah.
So you've got to understand these different components of how they play into your wealth building.
That's interesting. So what is the 5th one?
5th is long-term asset accumulation.
Okay.
So how are you accumulating your assets? So how are you accumulating your assets? What are assets? Your cash, your real estate, your net, things that helps in your building your net worth. are you having strategies to be able to save, to accumulate these long-term assets, right? These long-term assets, how are you saving it? Are you building wealth, right? And eliminating that at the same time. There are long-term strategies that's available for you to understand how to accumulate these assets and then how to protect those assets, right? From taxes, right? From inflation and debt. So these are very important to, like, they all are related. If you understand debt, inflation, and taxes, and how does it come to play with the way you're building your wealth, and how are you passing it on to the next generation, which comes back to the sixth pillar, which is estate planning. In every country, I'm sure there's estate planning. How are you passing whatever you're building to the next generation without a lot of taxes, right? Or paying more taxes than that's required? And how are you protecting it? So each one of us need to really look at, when we pass away, what are the implications to our family? Because we're not paying attention to that. We just, okay, we pass away, but there's a lot of cleanup that's available. That's like that the people who are left behind have to clean up.
Yes.
So then what kind of strategies do you have in place to protect your assets through estate planning?
Yeah, that's very interesting. These six, the cash flows, and your understanding your debt, emergency fund, protecting your money, or fund, proper protection, long-term asset accumulation, and estate planning. I am good. Not that I'm good. I've taken a notes on those ones. So what do you, these are really great thing everyone should be thinking about or should be doing. So my question is, when it comes to, it's about your fourth pillar, emergency fund, what do you think should be the minimum emergency fund?
The minimum is 5 months.
5 months.
Minimum is 5 months. Average is 7.5 months.
Okay.
And then, yes, and if you want to, a little higher, 10 months to 12 months.
Okay, average is 7.5. Is this average 7.5 months? Is that based on the country you live in, or is for anyone?
I think if you look at, it's for any, if you look at how, if you really understand how much money is going out, your expenses, and plan it properly, it just depends on you. If you have a lot of expenses, you better make sure you have a lot of money saved up.
That's true.
Right? It's like, if I don't have that much expenses, of course, I'm not going to worry as much. But if I have huge car payments, the mortgage, I have my food, discretionary, there's two kinds of expenses you got to be aware of. There are the fixed expenses, which are non-negotiable, right? That means that's your mortgage, your utilities, your car payments. Those are things that you cannot negotiate on. You have to pay them, your health care, right? And then there are the negotiable, discretionary expenses. Those are variable. Means what are variable expenses? Eating out. Yes, you have to have some of the food, the essentials of food, but do you really need to buy really expensive food? You can buy cheaper food, or you don't have to go out as much. You don't have to have so much entertainment or subscriptions to different things, right? Because if you don't have money, or you're going to have subscriptions to Netflix or to a TV show. If you don't have money, of course, you're going to start cutting those. Are you going to go get your hair done, your nail done, and things like that? No, those are discretionary expenses. So you have to understand what is a need, which is your fixed, versus what's a want, which are your discretionary. A portion of that is the want, the need, right, is in the food, but not, you don't have to be spending a lot of money on food. So that's why I call it discretionary.
Yes. So at least cooking from home, taking packed lunch, and all of those things. Interesting.
Exactly.
So give us an example of, you did talk about long-term asset accumulation, and also in that level where you started talking about investing in precious metals. Or investing in the property. So why would you suggest that precious metals are better? I know I come from India. We
Asians
accumulate
know.
gold and silver like no one's business. But in spite of it, not many people understand the elements of like what is it's a 9 carat gold is less worthy compared to 22 carat or 24 carat gold, because that pays more back as well, like when you're selling it. So how do we know that this is where we need to invest in? And also there are new hang-ups of bitcoins. People talk about bitcoins, but it's just, it is risky, at least in my opinion at the moment, and they're talking about NFT and all of that. So how do we, if we can't afford to have a health manager, sorry, money manager, health manager, wealth manager, sorry, or money manager consultation, how can we start? Because that's expensive, because 500 pounds, which in my currency, or $500, I can invest in gold or silver. So how would you suggest people start?
Well, I have one of my business is in the precious metal business.
Okay.
I only do businesses that I believe in and practice myself and own, right? And so one of them is a precious metal business. So in the precious metal business, I teach you strategies on accumulating precious metal, and it pays for itself, right?
Okay.
So it's a business in itself that you share with people, that you're able to pay for your precious metal.
Okay.
And this is where a lot of us really didn't understand the history of precious metal. Precious metal has been around longer than printed money.
Yes.
Right? And precious metal, if you hold it physically, you can go to other country and you trade your precious metal. And why I say that is when my family escaped Vietnam, all we had was gold. And some of the gold was thrown overboard by, when the pirates came on our ship. But my mom still had gold, and that she was able to save. And she took that gold and went in when we were on the islands, we're able to trade that gold for money to buy food, right? Our currency could probably be worthless if they don't trade our currency, but gold it works in every country. That was the gold standard when every country agreed on to use gold and back gold and silver, gold by printing money. So every time we printed money, we had gold that we put away. But that all changed in 1971.
Ah, interesting. That's why you mentioned that year. Oh, interesting. So precious metal, I believe in that, and I believe in property as well, like property investments. So how, if anyone wants to work with you, where can they find you?
Well, they can always find me on your show. You're my connection, right? But you can also find me on my website at Ngoc, Ngoc T Tran, Tran.com. So that's Ngoc, my middle initial T, and last name Tran.com. So you can book an appointment, and then we can find me on Facebook, find me on LinkedIn, and through you.
Yeah, that would be great. I'll put all Noc's contacts or her social media channels and her website address in the description if you want to go and have a look. That would be great. So tell us, what is that you would tell your younger self?
Well, for my younger self, I should learn financial literacy at a younger age and start investing at a younger age. And not like, for a lot of us, what happens to us is that we get complacent, we get comfortable.
Yes.
Right. And we don't understand money. We don't understand how money works. And so we're just put our head down, and we're told to work and save. But the way we're saving isn't the right way. It's a traditional old way that doesn't work anymore. We
Yes.
got to understand how to save properly and how does money work,
Yes.
right? In order to plan for retirement so that we don't run out of money and have a backup plan, we got to create residual income. And that is the key. Multiple streams of residual income that works for you while
Mm.
you're not working.
Yeah,
That's
that's
key.
yeah, that is, I think that's a very good advice. Anyone can give to their younger self. Even a 16-year-old can give that advice to his or her younger self. So what this let's have a little bit of fun. So if you're stranded at 2 o'clock in the morning, your apartment is on fire. You had to take only two things with you.
Mm-hmm.
What are those two things you would carry?
Definitely my laptop and my ID. My legal paper, which is my ID, where I can grab my credit card's my ID, my purse, right? It has all my credit card and whatever and my money in it, so that they know who I am and so they identify who I am, and my laptop. That's my life. My
Oh,
laptop can go
that's cool. At
anywhere.
least you thought about taking your purse out. What I said was someone else asked me this question. That's why I've got it on my show. What I said is my phone, chargers, and laptop. I didn't even think about my ID or passport or anything else, but I was thinking my phone, my charger, and my so
Yeah, you got to have the credit card, and your purse has your credit card and your money, right? So grab that. You can go to the ATM, take your money out, and buy your charger and stuff. But definitely,
yeah,
my laptop
that's
is
I've got to keep that in mind. I've got to take
yes.
those out rather than taking the charges.
Mhm.
Anyway, so the next question is: are you a morning person or an evening person?
Both. As an entrepreneur, you're an anytime person.
You're a hustler.
You're
Got to
you're
be
a
on every 24/7. No. This is one of the things I don't know. This is one of my pet peeve. People start saying that, oh, you get into a business because you can have you can set up your own hours and do things. It's not. When you become a business owner, you hustle a lot. If anyone says I don't hustle, then they are not the business owner. So
That's
just
right.
stay away from them.
Yeah, I mean, I
So,
start my day at 4 a.m. in the morning.
yeah,
So
that's
by 5 o'clock, I'm on a call already. I'm a meeting all morning long. And
yeah,
then sometimes my client meets me at night or on the weekend,
yes.
right? And I've never worked so hard. Well, I have, but this is like when you're working for yourself, it's a different kind of work.
Yes,
It's a different kind of work. So it's really not working. You're serving a purpose. And
yes.
so when you're building a business in the beginning, of course, you have to work
Mm.
hard, or otherwise you're not going to be able to survive. You're honestly, when you start out, you're still trading your time for money
Yes,
as an entrepreneur, right? And then that's when you learn strategies of creating residual income, where I have multiple residual income that's working while I'm not working, but I still have businesses, my accounting and tax and insurance business, that still it's a combination of residual and active income where I have to actively do work,
yes.
right? That's the strategy.
This is one of the things which that's my peeve as well. Like people say, oh, you get on a business because you want to make money. No, when you have got to put money to make money, so you've got to do things which you have got to do. And secondly, a third question, which is, are you a coffee or a tea person?
Uh, both. The reason why is I had a tea business on the side, and that was one
Okay.
of my side business that I was selling tea at the farmers markets. I have tons of tea. So between coffee and tea in the morning, I have right now I have tea, but I also have coffee, and then throughout the day I'll have tea. So, but
Okay.
definitely for in the morning, coffee.
First thing. Yeah, I am both tea or coffee person, but the way I make coffee or tea for that matter is long-winded process. So making a tea with masala and all the Indian way, it takes ages. Like you stew them and then you filter them, you put all of that. It takes ages for me at least. So coffee. But is it quicker? Nope, it's not quicker. At least you can stick it in the microwave. That's my answer.
Yeah,
Thank
we
you.
all have to have our vice, right? It's coffee, tea, whatever it is. But I can't drink coffee all day. Definitely just the first in the morning. But after that, during the day, I don't drink coffee. I
Yes.
drink tea throughout the day.
Oh, that's cool. Thank you. You're no wonder we are soul sisters. Thank you very much for coming on this show. Really, really appreciate. And I am so honored that you're the first person to be on my season 6 as well. So I am so grateful. Thank you very much. And we will talk again later and get an understanding of how many business do you own. So people look out for Ngoc T Tran. I will put in her details and social media handles in the description if you want to get in touch with her directly, or if you want to come through me, you can as well. She will sort you out. No matter where you are when it comes to financial health. She may not be able to give you financial advice as in tax planning or financial planning if you're in a different country, but she can do it if you're in US. So thank you all, and I'll see you in the next episode. Bye for now.
Awesome. Thank you. Bye.